Good morning, my dear friends. Now referring to you, my dear friends, tax deducted source TDS under the GST section 51. It has been introduced in India from 1st October 2018, not from 1st July 2017. Okay, then TDS deducted should compulsorily get registered under the GST law. TDS director says, sir, I am already holding GST registration. Sorry, Mr. Registered Person, that is a GST to pay at normal rates. As a TDS director, you should have to have a separate registration for which it is a mandatory provision for you under section 24 clause 6 of the CGST. Mandatory registration for you, irrespective of your threshold limit. If TDS is applicable to you to deduct, for your registration is mandatory. Unless until you have registration, you cannot deduct TDS. Unless you deduct TDS, where they require to deduct TDS, we are going to be charged the penalties on you if you not deduct the TDS where the requirement is arises on you. Section 122 penalty. How much is equal to 100% of the tax or rupees 10,000, whichever is higher. So better to have registration and make the payment of TDS to the department. Hey, Mr. TDS director, while making the payment of TDS to department, you should pay through electronic cash ledger. You cannot utilize your input tax credit while making the payment of the TDS. You get my point. TDS should be paid through electronic cash ledger. For which, what is a registration, sir? Here, the forms and are as follows, one by one I am presenting here. If you refer here, point number 1, first and foremost, access the portal of gst.gov.in and where form GST REG 07 is the form application. You have to be select that, choose the TDS deductor menu option in the portal. Further, enter the data, whatever necessary inputs, your PAN number, official name and contact details, but one not required to provide Aadhaar number. Reason, Aadhaar authentication not warranted if you are applying for the TDS. You get my point? Aadhaar authentication not warranted. Further, my dear friends, this particular slide, what I am showing on the screen, I will send you to your group. What by this entire PDF I will send to you. That PDF, it is a PPT. I will forward to you. I will share with you. Is clear? Consider, listen. Which application is said for the want of registration as a TDS deductor? Speak out. I say form GST REG 07 is an application for registration for the want of TDS registration under the GST. Further, after giving the PAN number, your legal name and other document relevant authentication, further, but not required Aadhaar authentication. Upload the documents. What are they? PAN number, document copy, address proof copy and authentication letter. You are the authorized person to read the TDS. So further, select with the DSC or EVC. What for? Digital signature. While submitting, you have to select either you want DSC or DSC or the EVC, whatever may be the mode you like. Electronic verification code to that mobile. The OTP will come. You submit it, OTP, and once the system processes your data, then before processing the data, There's an acknowledgement concept also will come from GST REG02. Acknowledgement is only a submission of application. Once the data is processed and it pop up with the department officer once verified and will grant certificate of registration. Now the time limit is 7 working days from the date of making the application for the want of the TDS registration. In the meantime, you will get acknowledgement with the ARN number. You get my point. Acknowledgement receipt number will get a very big number will get. Then department officer once verified, satisfied, will grant the certificate of registration as a TDS deductor from GST REG06. A simple process, my dear. Now I am a TDS deductor registered person. Now the point arises here, for whom TDS deduction made mandatory? All taxpayers? Absolutely not. There are the taxpayers like a government department, a government company, a statutory body, a public sector undertaking company, or a government company where the government has not less than 51% of the equity shares, or by way of voting rights, not less than the 51% of the voting held by the government in a particular company, we call government company. Government companies, TDS required. Government department, TDS required. GST department, for the GST department, TDS deductions made mandatory. Hey, GST department, you should be get registered as a TDS deductor. You may not be required to get registered as normal taxpayer, but you have deducted as a TDS deductor. You are required to get registered because you are dealing with buying of your furniture. You get the point, sir? Where the TDS made mandatory for the GST department. GST department is also be required to get registered as a TDS deductor under GST. Because one of the government department is what? GST department, income tax department, defense. For defense, few exemptions are there. I'll refer to you. Thereafter, all type of government organizations. If I say passport office, if I say the RTO office, if I say revenue department, even if I say local authority, GCC, Greater Chennai Corporation, BMC, Bombay Municipal Corporation, what not, Panchayat, municipality, corporation, as a local authority, you are liable to collect the TCS, DDS, sorry to say, TDS, tax credited source, and remit to department. As such, is a mandatory for you to deduct the TDS and deposit, for which turnover limit is not a criteria for getting registration. Now, what are the points I referred? Simple. Government, central, state, its departments. Whenever I say state, unitaries, local authorities, statutory bodies, government companies, public sector companies, or any society which is registered by the central government, state government under the Societies Registration Act 1860 are relevant to get registered under the GST law as a TDS deductors. We call them in short DDOs, drawing and disbursement officers. Very good. They only required to be TDS? Yes, sir. They only liable for TDS deduction in remitting department. Now only a recently amendment taken place from 1st October 2024. Hey, Mr. Registered person being a procurer of metal scrap from another registered person, a transaction is a B2B where the recipient being a registered person, procurer of the metal scrap, is also be liable to collect or deduct TDS and remove department. You get my point, sir? So an amendment taking place. So all these points I am referring in a simplified manner. Look here. Government department, public sector undertakings, or the corporations, Greater Chennai Corporation, municipality, local authority, or statutory bodies like ICA, ICMA, or ICA. That means what? The Institute of Cost Accountants of India, Institute of Chartered Accountants of India, like that. Thereafter, the any government what we can call the act enacted by the central or state in their respective parliament or the state assemblies are considered, those institutions also be called statutory bodies. Like slum, Tamil Nadu Slum Clearance Board has been enacted by the state government of Tamil Nadu by passing an act in the state assembly. Also become under the category of drawing and disbursement officers. Not only that, if you refer here, a society registered by the central government or state government under the Society Registration Act. Yes, there are societies. NCRT, you might have come across NCRT by studying your books and all. Curriculum, NCRT. National Council of Education, Research and Training. It has been established by the central government of India by in the Societies Registration Act 1860 as a society, as a trust. You get my point, sir? Not only that, Indian National Science and Academy, Indian National Science Academy, INSCA, that means Indian National Science Academy, which is also be established under the Society Registration Act by the government, but not the private parties. If a grey matter academic private limited open a particular new subsidiary company and that one is got registered with Social Registration Act, that is not going to come under this category. Did you? That should be society established by whom? Government. Simple to say, government is departments. Local authority. You get my point, sir? Public sector undertakings or any other person for whom the DDO, the TDS requirement of deduction required to deduct upon the recommendation of GST Council notified by the government, that person should go for compulsory to get registered and pay the TDS and make the remittance. But not all companies. Infosys company not required to collect for TDS. TCS company, MRF Limited not required. They are the private companies. If it comes into BHEL, Bharat Heavy Electrical Limited, which is one of the PSU, LIC, yes, it is a PSU. You get my point, sir? So, all public sector undertaking companies are required to deduct TDS. If the need arises for deducting TDS, they should get registered. Compulsory registration as per section 24 clause 6 of the CGST Act. Once you understand, now the law has been enhanced, extended its power to levy the TDS on metal scrap. If you refer here, a transaction basically metal scrap, supplier is registered person, recipient also registered person. In the given case of metal scrap, supplier is a registered person, recipient is a registered person. A transaction is a B2B. Hey, recipient, being a registered person, you require to deduct TDS and remove department. For that, you have to have a separate registration in addition to your normal registration as a TDS deductor. Get my point, sir? So now we came to know that who are required to get registered under the GST law as a TDS deductors, and we also came to know that the process of registration procedure applied from GST REG 07 with the sufficient documents not required to undergo other authentication. Then the department will issue acknowledgement from GST REG 02. Thereafter, within 7 working days of your application, department officer will process and will be finalized by granting the registration certificate to you in the form GST REG 06 as a TDS deductor. Then, wherever TDS required to be deduct, you have to deduct and remit. Now the point arises, when the TDS required to deduct, first and foremost, Mr. Fellow members, look here, the contract value not the invoice value. A contract executed between the supplier of the goods or services or both with DDO or with a metal scrap buyer who is a person. The contract value should be more than 2.5 lakhs. How to arrive that value? Refer the valuation. Section 15, subsection 2, clause A says that the value of supply should include all taxes and duties except GST taxes. The value. GST taxes should not be included in 2.5 lakhs. If the value of contract is exclusive of GST, exactly 2.5 lakhs, TDS not applicable. Only when the value should go beyond 2.5 lakhs, exclusive of the GST, TDS apply. Now I am telling you, my dear friends, the value of the contract 2,80,000, inclusive of the GST 28%. Now you tell me quickly, fast, take the calculator and tell me how much the value come exclusive of GST. 2,80,000 is the value of the contract, inclusive of the GST 28%. If so, what is the value of a supply exclusive of the GST? Contract value, exclusive of the GST contract value, exclusive of the GST contract value, 2,18,000, below the 2.5 lakhs. As a result, TDS not applicable, even though the person who got registered as a TDS deductor, but he's made an agreement with the supplier, contract value less than or equal to 2.5 lakhs, TDS is not applicable. When it is applicable, more than 2.5 lakhs is only in that case TDS applicable. Now, is it relevant to note, my dear? You are already aware of that. Place of supply. Place of supply is very much warranted in the given case to apply, to decide the TDS applicable or not. Now, like your income tax, when the TDS was deducted and paid net of TDS to the supplier, the TDS amount is equivalent to money value only for the person of deductee. Get my point, sir? Then when you are going to pay income tax for the assessment year, your liability of income tax is, for example, 1 lakh means TDS already deducted 80,000 rupees. In that case, how much you pay the tax to department? 20,000 rupees. That means similar to that, the provision we too have here. Hey, Mr. Deductor of TDS, are you deduct the TDS under the GST law under section 51? Yes, sir. Then in which month you deducted? In the month of May 2025, sir. That should be remit by 10th of the following month by filing GSTR 7. GSTR, R means return. R is in a registration. Submit the GSTR 7. Get my point, sir? By 10th of the following month, making the payment through electronic cash ledger. I paid, sir. Auto-populating that money of TDS what you deposited in the deductee electronic cash ledger. Deductee's electronic cash ledger is getting credited. For example, I deducted and paid TDS rupees 10,000. For example, my deductee account electronic cash ledger rupees 10,000. You get my point? How it will be passing on? As per GSTR 7 capital A, I should inform to my deductee saying that, hey, I deposit the money of TDS and you will get electronic cash ledger that money. I should inform within 5 days from the date of making the payment to department. As per rule number 63 of the CGST. When I inform to department, to the deductee. Deductee is going to make the payment for his output supplies. GST liability came, rupees 50,000. He already has electronic cash ledger, how much? 10,000. It is sufficient to deposit further 40,000 to remit. You get my point, sir? Sir, by doing so, what you want to achieve, sir? Transparency in bookkeeping. Transparency to minimize the evasion of taxes is my object to achieve. Now come back. Contract value is 2.5 lakhs or below that, no TDS. Is exceeded 2.5 lakhs, yes. Then in that case, look, the recipient is a DDO. You know DDO means government, central, state departments. 2. Local authority. 3. PSUs. 4. The society registered in the Social Registration Act. 5. A metal scrap buyer. Are they the recipients? Then only TDS will come. No, sir. The recipient not a DDO, sir. Recipient is not a metal scrap buyer, sir. Oh, in that case, who is the recipient? Sir, Infosys company, sir. Grey Matters Academic Private Limited, sir. Oh, in that case, no TDS. Even though the contract value exceeds 2.5 lakhs. Are you getting my point, my dear friends? If it is, sir, recipient is a CA institute, sir. Oh, DDO. Start everybody. Sir, recipient is a Madras University, sir. DDO. Sir, recipient is a buyer of a metal scrap registered person, sir. From another registered person he purchased, sir. Then, in such cases, if it is so, wait and test whether in case of intrastate supply, location of supplier and the place of supply in the same state. In such intrastate supply, the recipient, namely DDO or a metal scrap buyer, should be in the same state, in the state where the supplier has the place of business. Yes or no? Sir, no, sir. Location of supplier, New Delhi. Place of supply also New Delhi. But the recipient is from Chennai, Tamil Nadu. Oh, in that case, TDS not applicable. Can you tell me anybody why not applicable? By using your application? Practically, logically, finally you say, no. Simple logic, brother. I am Mr. D of Delhi. You are C of Chennai. I am providing service to you, or I supply the goods to you, for example, whatever may be. The place of supply happens to be happen Delhi only. Location of supplier New Delhi. Place of supply also New Delhi. Place of New Delhi. But recipient only not in Delhi. That means my supply is a taxable supply. I am liable to pay TDS. Before that, I am liable to, as a supplier, I have to be charged the GST. CGST, GST 9% each. If CGST 9% each is a charge, my output tax liability is a credit to C of Chennai? No. This point I told no already. Now, if the Chennai fellow being a recipient did the TDS and remitted to department, what TDS he deducted? He deducted as CGST, GST, correct? In that case, that amount is remitted to department. The supplier sitting in New Delhi can take in return cash ledger. When the credit is not able to pass, cash also can be able to pass. Get the point? Logically, my dear, have I told you or not? Location of supplier in New Delhi. Place of supply in New Delhi. Recipient is from C of Chennai. You get my point? Sir, example, sir. Example is this, sir. I am Taj Hotel in New Delhi. You are C of Chennai. Came all the way from Chennai to New Delhi for official work, office purpose. and stayed in my hotel for 10 days. I am charging 1 lakh rupee. CGST, SGST will apply, correct? Place of supply is equal to where the property is located. Where located? Delhi. Now, my output supply CGST is eligible to claim ITC by the recipient? No. Same way, if the recipient is a DDO, for example, deducted the TDS, CGST, SGST, TDS deducted, that remitted department, that TDS cannot be get a electronic cash ledger to supplier account. Get my point, sir? That is the reason the law very clearly stated that under section 51, subsection 1 itself, there is a proviso where it very clearly says that TDS is not applicable if the location intrastate supply where the recipient is not belongs to supplier state. TDS is not applicable to the recipient. TDS who will deduct a recipient? Not applicable. If it is said no, not applicable. Sir, in the case where interstate supply, no problem. IGST can be flow across the India, pan-India basis. You get my point? Sir, location of supply, Delhi. Place of supply, let us say Bihar. Interstate supply. Recipient in Chennai is a DDO. Can avail ITC? Can avail ITC IGST? Yes. If the TDS deducted by the recipient can take into electronic cash ledger by the supplier? Yes. You get my point, sir? Here, TDS finally apply only when your contract value more than 2.5 lakhs exclusive of the GST and the recipient should be a DDO or a metal scrap registered person as a buyer. Thereafter, the location of supplier and place of supply in the same state, intrastate supply case, yes, the recipient is located in the supplier state. If it is yes, in all these cases, TDS will apply. What rate? 1% of CGST, 1% of SGST. On what value? The value of payment going to make to the supplier by the recipient. Contract value 3 lakhs, sir, exclusive of GST, sir, but the invoice raised by supplier is only for rupees 1 lakh. And the 1 lakh only payment I am going to make. When I am going to make payment? When you receive the invoice? Invoice received May month, payment going to make June month. TDS required to deduct when making the payment, namely in the month of June. On what value? On the value of a invoice for which you are going to make the payment. For rupees 1 lakh only I am going to make the payment. On 1 lakh rupee, 1% TDS, CGST, 1% SGST. If it is interstate supply, IGST, TDS, 2% will apply. Are you with me to understand? It is there here, very clearly mentioned for your kind consideration. It is. Yes. Got the clarity? Now, what I made to you just now, I want to bring to a notice. Intrastate supply. Intrastate supply. Recipient is, if not located in the state of supplier, then TDS not applicable. Remaining all cases, TDS applicable if the value exceeds 2.5 lakhs. Correct, my dear friends? Again I am telling you, sir, 2.5 lakhs, more than 2.5 lakhs is the taxable value of supply. It should not be exempted value of supply. For example, the bill value containing 3 lakhs. In that 2 lakhs taxable, 1 lakh exempted. Total 3 lakhs. TDS not applicable because the taxable supply not exceed rupees 2.5 lakhs. Taxable value of supply should be. If exempted supply, TDS not applicable. Now, look here on the screen. I hope so you will answer these parameters. Sir, location of supplier, state A. Location of recipient, state A. Location of supplier, state A. Location of recipient, state A. Place of supply also state A. In intrastate supply, the recipient located in the state of the supplier. Yes or no, bro? TDS will applicable or not? All other conditions satisfied. All other conditions are satisfied. In the given case, TDS applicable? Yes. Now you tell me. I will read the point. You tell me. Location of recipient is in state B. Location of supplier, state A. Place of supply, state A. Intrastate supply, where the recipient is not in the state where the supplier is located. TDS applicable? Yes or no? No is the right answer. Further, location of supplier, state A. Place of supply, state B. Registration of the recipient, state B. In that case, TDS applicable? Yes or no? Interstate supply, IGST apply, then TDS always apply if all other conditions satisfied. Is clear? Yes. Now tell me, UT1, UT, where there is no state legislative assembly, where the UT GST Act applies. UT1, UT1, place of supply, UT1. Say Ladakh. Location of supply, Ladakh. Place of supply, Ladakh. The recipient also Ladakh. TDS applicable, yes or no? Yes or no? All other conditions satisfied, amma? Yes. Then you tell me point number, next point. UT1, location of supplier. Place of supply, UT2. Recipient, UT3. Yes, applicable or not applicable? Yes or not? Yes, applicable, bruh. Interstate supply. Then, location of supplier, UT1. Place supply, UT1. Recipient is UT2. Yes or no? TDS applicable? Yes. TDS not applicable? No. Yes or no? No is the right answer. Now, practically I am presenting here for your kind consideration. Now you tell me the given case. Look on the screen, please. Supplier, Raj and Company, registered person, New Delhi. Supplier supplied interior decoration services to Andhra Bhavan at New Delhi for rupees 5 lakhs. State government of Andhra Pradesh, registered in Andhra Pradesh, recipient in Andhra Pradesh. In the given case, you tell me what is the place of supply? What is the place of supply? If interior decoration service provided to Uniform Property, section 12, subsection 3, clause A of IGST, where the property is located. You get my point. In the value of supply, I am inviting place of supply, without which TDS cannot be able to handle. And value of supply, more than 2.5 lakhs. How to determine which should be exclusive of taxes? Get my point, sir. Valuation chapter is so bigger. In this process, tell me, TDS applicable? Yes or no? Say no. Location of supply, Delhi. Place of supply, Delhi. Intrastate supply. Where the recipient where located? Andhra Pradesh. Recipient not located in the state of the supplier. Therefore, TDS not applicable to the recipient. Namely, DDO, Andhra Pradesh state government is a government department, one of the department. In that case, TDS not applicable. Because intrastate supply. In case of intrastate supply, the recipient must be belongs to supplier state. Then only TDS. Otherwise, in the given case, no TDS. Further tell me of this question, my dear friends. You tell me. Rajan Company, Chennai. Supplier. Supplied the interior decoration to Andhra Bhavan, which is situated at New Delhi, to the recipient. Recipient is Andhra Pradesh state government, which is in the Andhra Pradesh. In that case, the recipient in Andhra Pradesh, supplier in Tamil Nadu, place of supply New Delhi. Intrastate or interstate? Interstate. IGST levy cases. If the IGST levy cases, IGST is free flow of a credit, a pan-India basis. Resultantly, if the TDS deducted by the Andhra Pradesh government and remit to Department of GST, it is auto getting populating to the supplier electronic cash ledger. You get my point, my dear friends. So in that case, TDS applicable. Is clear, sir? Further, I hope so you got clarity. You got command of experience on this? With this further, just simplifying, saying that Sir, when to deduct TDS? When to deduct TDS? When you make the payment. When you make the payment made or credited to supplier, then TDS should be deducted by the recipient. Is clear, my dear friends? The value should be more than 2.5 lakhs and that value should be a taxable supply of goods or services or both. The value should exclude the taxes, GST taxes. Now, simple amma. All the point what I referred. Furthermore, I am presenting step 1, step 2, step 3, step 4. Look here, step 1. There must be value should be taxable supply more than 2.5 lakhs. Exclusive of GST taxes. Supplier should be a registered person. Yes, obviously. Supplier must be a registered person. Thereafter, supply should be a taxable supply. Further, the recipient should be a DDO or from 10th October 2024 onwards, the recipient a registered person being a buyer of a metal scrap from registered person. Step 3, in case of intrastate supply, the location of the recipient must be located in the same state of the supplier. In case of interstate supply, no problem. Location of the recipient may or may not be in the same state of the supplier. Step 4, the TDS should be deducted at the time of payment, at the time of making the credit to the account of the supplier. TDS rate, CGST, HGST 1% each, IGST 2%. You get my point, my dear sir? If that is the case, further presenting such a TDS deductor here. Look in the screen here in the given case. Supply of goods, supply of services which takes place between DDOs. No TDS. Oh, very important point. TDS is not applicable as per the proviso to section 50 subsection 1 where one government department supply the goods or services to other government department. Maximum generally it is under exemption. However, if Indian Railways provide services to state government secretary where the value exceeds 2.5 lakhs, TDS not applicable. It is a taxable supply. Indian Railways is liable to pay GST. Forward charge. You get my point, sir? So, TDS not applicable. Sir, I will tell you here, I will show you a concept for information confirmation purpose. BHEL, a public sector undertaking company. Metal scrap. Why should be immediately to that extent? Wait, first decide this. I will come to the point. Here, Indian Postal Department, government, provide these services to Union Finance Ministry, where the value of supply exceeds 2.5 lakhs contract value. Contract value only. That contract may be spread 2 or more financial years, no problem. The value of the contract should be more than 2.5 lakhs executed by the Indian Postal Department with the state government or other department of the government. In that case, taxable supply, GST applies, forward charge, no exemption. In spite of that, TDS not applicable. Are you with me to understand? There is a provision. TDS is not applicable if the transaction in between DDOs, state government provided supply of goods, supply to other state government or to central government, vice versa, PSU to PSU, society to PSU. In that cases, TDS is not applicable, though it may be a taxable supply. Value exceeds 2.5 lakhs. However, in the recent past, amendment taken place where from 10th October 2024, metal scrap on which TDS applies if a transaction is a B2B. In that case, that B2B transaction, even in between DDOs, TDS applicable. Because for this product, TDS is applies wherever condition satisfied. Even though the transaction may be in between DDOs, other than the metal scrap, TDS is not applicable if the transaction in between DDOs. BHEL, a public sector undertaking company, a registered person under the GST, Mumbai, supplied the metal scrap rupees 3 lakhs, which is exclusive of GST, to Coal India Limited, government company, which is also one of the PSU nature, registered person under the GST Mumbai. Now, location of supplier and the place of supply in the same state of Maharashtra. The recipient also in the state of Maharashtra. In that case, the transaction between two DDOs, TDS applicable, not applicable. With regard to metal scrap, TDS is applicable. Even the transaction between two DDOs, if it is other than metal scrap, transaction between DDOs, TDS not applicable. Is clear, my dear friends? So in the given case, yes, TDS applicable because it's a forward charge, taxable supply, invoice date 17th May 2025, and TDS is applicable. 1% on 3 lakhs, 1% on 1 lakh, 1% on 3 lakhs. We should not include GST taxes in the value of supply to tax TDS. TDS should not be charged inclusive of the GST under the GST provisions. Got the point? Now, you tell me in the given case. Sometimes before I said to you, in case of RCM comes into picture, a supply for which RCM apply. Who liable to pay GST? Recipient liable to pay GST. Recipient paying the full amount of GST department. Then deduction of TDS, deduction of TCS does not arise. Am I right, sir? Look on the screen. One of the classical example for this. Hanuman and Company is a GTA, is not paying the GST, not opted to pay GST, not declared in declaration to pay GST under forward charge. Then by default, goods transport agency, where the goods transporter issuing consignment note to the BHEL Limited PSU, which is one of the DDO, value how much? 3 lakhs. Who liable to pay GST? The recipient, BHEL, where the RCM applies, liable to pay GST. If they are going to pay GST full value under RCM, 5% GST they are going to pay. Then again, TDS applicable to BHEL? No, no TDS for BHEL.
TDS is applicable even if the scrap sale is not in the normal course of business. Scrap sale is not in the normal course of business, also TDS is applicable.
Now, that means what scenario?
A company is there,
Registered
company, registered person, whose business is different from the metal scrap sales.
Okay.
They are selling they're selling some scrap, which is the metal scrap, to the person. After 10th October 2024, whether they have to deduct TDS to a metal.
Excellent. Excellent point. What he says is, my name is Tata Motors. I am manufacturing heavy duty vehicles. while manufacturing scrap generated, metal scrap, which I am disposing. I am a registered person. To whom I am disposing? I am selling to registered person or unregistered person? Registered person. B2B. The scrap is qualified for TDS. Yes, TDS will apply. Though it is in furtherance of my business. TDS applicable to the recipient. This point I will clarify to you by giving the explanation. Very good point. So I am giving here explanation. Cases for which TDS applicable or not applicable in the case of metal scrap. Look on the screen. First point, supplier unregistered person, recipient buyer unregistered person, exempt, therefore no TDS. Supplier unregistered person, recipient unregistered person, then RCM apply. Who liable to pay tax? Recipient liable to pay tax. Is RCM category. A new entry under RCM. Then TDS not applicable. Correct? Further, supplier is a registered person. Recipient is a registered person. TDS not applicable. You get my point, sir? FCM. Supplier registered person. Metal scrap supplied to buyer registered person. Even though the buyer may be a DDO. Not a DDO. Means a private company but procured. Tata Motors sold the metal scrap to Rajaram and Company registered person. TDS applicable. Is clear? This PPT I will share with you. Don't worry. RCM comes into picture. No TDS, no TCS under the GST. So in the given case, no TDS. Further referring from here. My dear friends. There are certain government defense departments, not entire defense, certain identified defense departments are notified for which TDS not applicable. Authorities under the Ministry of Defense exempt from TDS, only few departments like the accounts department, like that there are some departments are there for which TDS is not applicable. As I told you, TDS not applicable if the transaction between the DDOs. That's it. Once you understand, straight away will take you into the valuation, how to arrive the value to pay the GST. Look on the screen, please. Example. Supplier X makes supply worth rupees 11,800 inclusive of the GST to municipality where the contract for supply is for 15 lakhs. The rate of GST 18%. Supplier and the deductor are in the same state. Find the following. TDS to be deducted by municipality, local authority. Sir, you have to refer the invoice value or contract value? Contract value, which is how much? 15 lakhs, more than 2.5 lakhs. Now you tell me, this will attract TDS or not? Because the recipient is by whom? Municipality, local authority. Supplier of the goods or that worth is the whatever may be the value going to supply is also in the same state where the municipality is located. So intrastate supply where the recipient is located in the same state where the supplier has the place of business. TDS will apply. On what value? The value which is going to make the payment. What value you are going to make the payment? 11,800, which includes the GST. You eliminate the GST, find out the value on which you apply CGST 1%, SGST 1% as your TDS. Municipality should deduct. How much value come exclusive of GST? 10,000. On which CGST 1%? How much? 100. SGST 100. Therefore 200. Deduct the 200 rupees from 11,800. The balance 11,600 you make the payment. And what you amount deducted as a 200 rupees TDS should be remitted to department by following month, by 10th of the following month. Get my points? Answer on the screen. Yes.
Deducting
get some payment to the
Hmm.
supplier at the time of paying tax. Will he pay exclusive of the TDS or inclusive of TDS and take the balance of TDS?
That's what I said. No, when the supplier is the supplier X, no here, supplier in the given case, supplier is X, correct Abba? Supplier going to make the payment of a CGST HGST, 900 CGST, 900 HGST. When he's going to make the payment through electronic cash ledger, he already has the TDS of 100. So 900 minus 100, balance 800, credit to electronic cash ledger to make the payment. CGST 900, SGST minus 100 cash ledger is already there. Balance 800. You make the payment. Get my point, sir? You have to ask the doubt. Then only you will understand. Online students, are you catching the point?
Yes, sir.
Yeah, good. So with this, we are proceeding. The answer is on the screen now. Further, one more question. Is and all I have lifted from the desk of the CBIC circular. When they given the explanations, they given the illustrations. This and all from there one I got. Now look here. One example. Hopefully you answer this. Supplier Y of Mumbai makes taxable supply worth rupees 10,000 and exempted supply worth rupees 20,000 in an invoice or bill of supply to finance department of Government of India located in New Delhi, where contract for supply is for rupees 6 lakhs, 2,60,000 for taxable supply including the GST and 3,40,000 for exempted supply. The rate of GST 18%. Following payment is being made by the Government of India to Mr. Y, rupees 10,000 value of taxable supply plus 1,800 integrated tax, namely IGST, plus 20,000 rupees value of exempt supply. Whether any reduction of tax is required in the given case. Quickly. Yes or no? No. Why? Sai, tell me why. How much you say? 2 lakhs is inclusive of GST. Exclusive of GST, how much comes? We have to refer the exclusive of the GST is the value. The value should be exclusive of GST. 2 lakh 23,000 something, which is less than 2.5 lakhs. Even not 2.5 lakhs. Even 2.5 lakhs also we won't consider. Get my points. Resultantly, in the given case, TDS not applicable. Sir, exempt value should not be considered for value of supply for TDS purpose. Value of supply for TDS purpose. Exempt supply should not be considered. Therefore, TDS is not applicable in the given case. Look on the screen. 2,20,340 after exclusive of GST. Then below 2.5, not exceed 2.5 lakhs. Therefore, no TDS. Now I am asking you whether my below friends will answer or not. Let's see. Look on the screen. Supplier ZA is a person registered under the composition scheme in Jharkhand who makes taxable supply worth rupees 10,000 to local authority of Jharkhand, where the value of taxable supply under the contract is for rupees 2,55,000. Find the TDS if any. TDS applicable or not applicable? Quickly. Yes, extent has served to answer. Yes. Supply registered person. 2. The supply contract value more than 2.5 lakhs. Sufficient. On what value? When you make the payment, rupees 10,000. On which TDS 1%, CGST 1% SGST is equal to 100 rupees each. TDS is applicable. Resultantly, the Jharkhand municipality should deposit the amount to department using form GST R7 by 10th of the following month. And the same should be communicated through auto populating with GSTR 7 capital A within 5 days of the submission of this particular one. Payment of this particular TDS is clear. Any difficulty? communication difficulty. I will make communication difficulty, make simplification. GST at 7 capital A, I said, na, within 5 days from the date of making the payment of TDS with the GST at 7, from the date within 5 days you have to submit. Intimate to the directee. Who should intimate? Director. Now it is physical mode ruled out. Should be made available to the recipient, namely the supplier of that particular supply, who is a deductee, in the auto population mode, which is form GSTR 7A. Physical mode of intimating in writing a letter and all ruled out. Is clear? Further, answer to this, yes, applicable. What is required? Supplier should be a registered person, and supplier should be a taxable supply, and the recipient should be a DDO or a metal scrap registered person. The value of contract more than 2.5 lakhs. In the case of intrastate supply, the recipient should be located in the same state, the state where the supplier has the place of business. That's it. Now, bring in your notice furthermore points which has merit. Registration mandatory. Yes, mandatory. Section 24, class 6. Where the TDS exceed 2.5 lakhs, deduct. Here, that TDS not deposited to the government by filing the GSTR 7 by 10th of the following month, delay happened. Even the government, even the GST department deducted TDS, but not remitted the department within 10th of the following month. Delay happened. Liable to pay interest. Mandatory to pay. Section 50, subsection 1, at the rate of 18% per annum. Apart from that, information to the deductee by deductor in the form GST or 7A. This is required to be refer here. Required to furnish the system generated TDS certificate in form GST or 7A to the deductee within 5 days of creating the payment of TDS to the government. The auto generation of GSTR 7A on the portal ensures timely compliance. So, manual issuance of GSTR 7A and delays are unlikely. That means there is no delay. There is delay in communication to supplier by person deducted the TDS, namely deductor who did the TDS not inform in time to deductee does not arise, because when I make the payment to department by 5/7 from the date within 5 days means today I make the payment means by next day onwards. So 10th of June 2024 deposit amount within 5 days means 11, 12, 13, 14, 15. By 15th of June this will be auto populated within the same day. It will be auto populated. Next day is auto populating in the deductee electronic cash ledger. That amount as is credit, electronic cash ledger credit. Is clear? Therefore, physical mode of communication unlikely. That does not happen. Resultantly, if I have not communicated within 5 days from the date of making the payment of TDS, not communicated by way of GSTR 7 capital A, penalty does not arise. Resultantly, there was a penalty provision under section 51 subsection 4, which is now redundant, because when I deposit the amount, maybe in time or belatedly, from the date of making the payment, within 5 days system will take care to make available to the recipient. Recipient in the given case here, the supplier of the goods or supplier of services. You get my point, sir? Therefore, penalty is a redundant provision, excessive provision, which is omitted. Section 51, subsection 4, omitted. No penalty for delay in communication does not arise, because auto populating, na? But it should be auto populate. It should be made available to the recipient. Namely, in the given case, deductor should make available that deduction of amount in the form GST 7A to the deductee. Hey, your amount I deducted TDS, remitted department. You check, it is there in your electronic cash ledger. Is a system communicating now. Is clear, my dear friends? But communication is required. Got the clarity? Further, fails to make the payment within the time, you have to pay interest. Fails to furnish the return in time, you have to pay penalty, rupees 100, CGST 100, the maximum rupees 200 per day, or maximum rupees 5,000, means 5,000 CGST, 5 GST, namely 10,000, maximum 10,000. It cannot go beyond that. Further, fails to furnish form GST 7A now does not arise because which is omitted from 1st January 2021 itself. Thereafter, 51(7), where in case recovery may be initiated if I am not paid in time or tax not paid evaded, TDS deducted but not deposited, TDS deductible but not deducted. So I am liable to pay TDS but not paid. In that case, department will send the notice. Now section 74 capital A, which is from 1st November 2024. No section 73, no section 74 now. These two are merged into one particular name called section 74A. A notice will be issued by department to ask you to demand to pay the TDS if not paid. Section 74 capital A new provision I will explain to you in due course under the term called as assessment, demand and recovery chapter. I will refer this. Are they TDS? See, if excess amount paid, for example, by mistakenly value of invoice is 10,000, counter value 15 lakhs. By mistakenly on 15 lakhs counter value, the deducted TDS 1%, CGST 1%, GST and deposit. That deductee, supplier of the goods is crying, yes sir, 15 lakhs says sir, deduct pandinga TDS, how amount deduct pandinga? No problem. I deposit the amount to the government only, which is automatically populated in electronic cash. See, it is there in the wallet, electronic cash ledger. Then the supplier says, sir, so much you deposited and dated from my side, and for kind consideration, that much of TDS what you deducted is not my liability, sir. Oh, your liability of payment of GST far lesser than the TDS amount lying in the electronic cash ledger as a credit balance? Yes, sir. Then don't worry. Hey, Mr. Supplier, if you have excess credit balance electronic cash ledger than that of your liability, you are eligible for refund. Section 54. Apply for the want of refund. Refund will be given to you. Get my points? Are they required to file the annual return? Not required. TDS return not required to file GST 9, GST 9A, 9C. Not required to file. Annual return not applicable to TDS deductor. Now, a simple problem, bring your notice before going for break. You have to answer this. X Limited supplier has received two different purchase orders from Education Department, a unit of State Government of Tamil Nadu, specified under section 51. The details two purchase orders, namely purchase order number 1 for 3 lakhs inclusive of the tax 60,000, purchase order number 2 lakhs for rupees 3,50,000. Person has received goods in the month of July. The bills are approved and payment is made on 15th August. Find the following: quantum of TDS and the person liable to deduct the TDS. quantum of who is liable to TDS? Education department. What rate? 1%. CGST 1% GST. On what? Order number 1 TDS supplier? No. Order number 2 TDS supply. What value? 3,50,000. On 3,50,000, 1% CGST, 1% GST. How much comes there? Huh? Huh? 3,500 TDS CGST, 3,500 SGST. Correct? Now, point number B. Last date of payment of TDS is a contract value executed date, or is the date of invoice or date of payment? Date of payment. When the payment made? 15th August. So by 10th of the following month means what? 10th of September is the due date. Further, due date of fund is the certificate to form GSTR 7A auto populating. Now within 5 days, when I submitted 10th of September, within 5 days means count again from the next day. By 15th of September, date of fund is form GSTR 7, same date of payment. Date of payment, date of file with GSTR 7, both are one and same. Get my point, sir. 10th of September. Thereafter, penalty for late furnishing of GSTR 7A omitted. Not required, no, Baba. Is auto populate concept now. Before auto population, is a physical mode should be intimate by the deductor to the deductee, which is not now warranted auto populating. Physical mode of communication unlikely, not warranted. Therefore, penalty unwanted. Does not arise penalty concept. Therefore, section 51, subsection 4, penalty for late communication form GSTR 7A omitted. Is clear, bro? As simple as that. Answer on this. Which is to be in the form of TDS. Interest or inter is there. Ex-limited supply received the different 2 orders from Department of Tamil Nadu. Where the ex-limited is not mentioned. Ex-limited, look at where they are not mentioned. Therefore, I approach with IGST. Is clear? Further, 10th of September. Further, 15th of September, 7. D. GST 7 due date is equal as a GST payment, TDS payment date is equal to GST 7 date. Thereafter, late payment omitted. Penalty. Is clear? With this, TDS provision application is meant to say in total have covered. We continue with a new chapter, TCS under the GST, tax collected at source, TCS. It is applicable to whom? It is applicable only to electronic commerce operator, e-commerce operator, not any other person. Who is e-commerce operator? Section 2, subsection 45, electronic commerce operator means any person who owns, operates and manages digital electronic platform or a facility for electronic commerce, whoever may be having it. Now, this TCS provision brought into force in GST law from 1st October 2018. If so, for the TCS collector who supplied goods or services on behalf of the others, then the TCS apply to e-commerce operator, where the e-commerce operator himself is not a supplier of the goods or services. Then e-commerce operator liable for TCS, apart from his liable to pay GST and the commission. Generally, in practical manner, e-commerce operator broadly 2 groups. A group of e-commerce operator falls under section 9, subsection 5, where those e-commerce operators are not liable for TCS. Reason I will tell you. The entire GST is liable to pay by e-commerce operator in 4 cases. 1. Radio taxi or any other motor vehicle including omnibus which is operated by the operator through e-commerce operator. In that case, e-commerce operator, you only liable to pay GST as if you are the supplier of the given supply of service. Then why should we collect the TCS? Second case, a short-term accommodation supplier of service, a housekeeping supplier of service. If basically the short-term accommodation supplier of service, housekeeping supplier of service are uninsured persons supplying their supply through e-commerce operator. For example, my name is Mr. Vijay. I am providing housekeeping services through Urban Club. Urban Club is then e-commerce operator. Vijay is a uninsured person. In that case, Vijay supplied services of housekeeping through Urban Club. Who liable to pay GST? Urban Club. As if Urban Club is a provider of housekeeping services. Then why should be a TCS for the Urban Club? Get my point, sir. Therefore, TCS not applicable under section 9(5) cases. And the fourth point under 9(5) is called as cloud kitchen services, where takeaways, a restaurant, standalone restaurant providing only takeaways, not sit to and eat. I will get the orders through e-commerce operator and the restaurant supplying the food through e-commerce operator to customers. In that case, such e-commerce operator only liable to pay GST, not by the restaurant. 4 cases. 1. Radio taxi or any motor vehicle which is including omnibus given provide the services of transportation of passengers through e-commerce operator. Liable to pay GST, e-commerce operator. Second point, short-term accommodation supplier, uninsured person. Till he reaches his threshold limit for registration, he supplies the services through e-commerce operator. E-commerce operator liable to GST. Housekeeping supplier of service, being uninsured person, till he reaches his turnover limit for registration, he is providing services through e-commerce operator. E-commerce operator only liable to pay GST. At the same time, cloud kitchen services supplied by the restaurant fellow through e-commerce operator, liable to pay GST by e-commerce operator. In that all cases, section 9(5) apply. TCS wala, that is e-commerce wala is paying the GST full amount to department. Then question of TCS does not apply. All other than this, e-commerce operators who are not covered under the clutches of section 9(5), for them TCS apply. E-commerce operator not covered under section 9(5), for them TCS apply. TCS on what value? Valuation. Again, valuation. Here the value of supply is different. Value of supply here is net value. What do you mean by net value? Supplies made by a e-commerce operator for one vendor. Vendor goods supplied by e-commerce operator through his e-commerce platform for a given month, less returns if any made by the customers for the given vendor goods for in the given month, supplies less returns. The balance positive is called net value. Positive net value only subject to TCS. Of course, TCS not applicable if the RCM apply. TCS not applicable if the supply is exempted supply. TCS not applicable if the supplier is unregistered person. Careful. Supplier is unregistered person. TCS not applicable to e-commerce operator, because once it remitted the amount of TCS to department, auto populating as electronic cash ledger of the deductee. Get my point, sir? In that case, if the supplier is unregistered person, TCS not apply. Is clear, my dear friends? And such a TCS wala wanted to pay the TCS to department, he has e-commerce operator, made mandatory, registration for him is mandatory. Registration mandatory under section 24 class 10. A person required to read the TCS required to get registered first and remit the amount to department. It is in addition to regular normal registration. For the commission earned by the e-commerce operator paying the GST for which registration. Apart from that, in addition to that, a e-commerce operator who is liable to collect the TCS should get separate registration as a TCS collector under section 24 class 10. Mandatory irrespective of the turnover. Procedure of registration in a simplified manner presenting for TCS. Look here. Registration procedure for tax collectors. First start point. Visit portal. Important. Without the portal, you cannot do anything. GST info portal. Access the official GST website. Okay. Then click services. There go registration. There go new registration. New registration. Then navigate to registration options. Then select I am a tax collector button. Choose TCS registration type. Thereafter, fill the form GST REG07. Same application, what is meant for TDS registration purpose, same application for registration for the TCS wala. Apply. Provide necessary details. Type it. Legal name of e-commerce operator, PAN number of the company, mobile number and email. For the email, to the particular mobile number, OTP will come. For the OTP purpose, state or UT where you are belongs, where the TCS to be collected. Here only I want to say, e-commerce operator basically from Chennai. Amazon Chennai Raja is e-commerce operator. He is supplying the goods of Chennai suppliers. He is supplying the goods of vendors belongs to Karnataka, vendors belongs to Andhra Pradesh, vendors belongs to Pondicherry, vendors belongs to Kerala. As a TCS collector, I should get registered in all the 5 states where my vendors are there. Are you getting my point? In addition to normal registration, I should have to have a 5 registrations TCS state-wise, because a registration state matter. State-wise registration required. Get my point? I update, sir. After submission the information, you have to upload scanned copy documents. We will work out. First refer here. Okay. Thereafter, here upload required documents. PAN number copy of the company, authorization letter, the person who is interacting with a particular network portal on behalf of the company, address proof of the principal place of business, business establishment, address proof, ID proof of authorized signatory if required, obviously required, but authentication of Aadhaar not warranted. For the TCS wala, no need of Aadhaar authentication, which is not mandatory. You wanted to give upfront, is up to you. We are not going to ask, said by department. Further, submit application, choosing DSC or EVC. You know that, digital signatures. Finalize submission, submit. ARN generated means acknowledgement from GST REG to ARN will come into picture. Further, department officer by taking 7 working days from date of submission will verify. Okay, satisfied, granting dash. Certificate of registration as from GST REG 06. 06 certificate for normal registration or TDS or TCS, but they mention TCS collector, TDS collector, a registered person like that. Once you obtain the TCS registration, Then here, Aadhaar authentication is not mandatory for persons applying the TCS application for registration. Now, you tell me, in the given case, for me, TCS applicable, not applicable. Look on the screen. I am going to say only the presentation. You have to come with the answer. My name is Titan. I have a website titan.co.in. Website Titan. There I am displaying my own products. You wanted to buy a particular wristwatch worth rupees 10,000 to give a gift for your elder brother who is now going for marriage. So you want to give as a gift. You selected and place the order. Titan company received the payment. Titan company initiated the delivery. Delivered. Billing address different from delivery address. What is the place of supply for Titan? Delivery address. Excellent. Now, the same state where the Titan is located, intrastate supply. CGST is charging 9%. CGST on rupees 10,000. Taxable supply. He made supply through electronic commerce. No doubt. Titan here is electronic commerce operator. Now you tell me, bro, for a Titan company, TCS applicable or not applicable? Not applicable. Excellent. Hats off to the answer. Why not applicable? He himself is a supplier. You get my point, sir? Seller side e-commerce operator himself is a supplier. Repeating, seller side e-commerce operator. Who is the seller? Titan. Website he has. He himself is a supplier. Then he is liable to pay GST and a forward charge. Full amount of GST paid. TCS not applicable. Seller side e-commerce operator himself is a seller. Supplier side e-commerce operator, he himself is a supplier. TCS not applicable to the supplier. E-commerce operator. Is clear? Why? Logic. Entire amount of GST is paying. You get my point? For whom he should deduct TCS? He himself cannot deduct TCS to himself, which is baseless. No logic. Therefore, you rightly said in the given case, TCS not applicable. Got the clarity? Further, my dear. In the given case, Peter England, seller of the goods in Tamil Nadu, selling the goods through Amazon. Amazon is e-commerce operator. He supplies the goods to buyer. Collect the payment and given to the seller. Payment should be collected by e-commerce operator. That is underlying point. Payment should come to e-commerce operator. Then e-commerce operator is going to make the payment to his vendor, namely Peter England. In that case, in the given case, who is e-commerce operator? Amazon. TCS is applicable to Amazon or not? Yes, because seller side e-commerce operator himself is not the seller. Seller side e-commerce operator who is himself not a seller. Then e-commerce operator liable to collect TCS. And that e-commerce operator not covered under section 9(5). You get my point, sir? Therefore, TCS apply. Mandatory. Now Peter England, registration is mandatory. If supply the goods through e-commerce operator, the law was yes. The law is now no. A supplier of the goods can supply through e-commerce operator who may be uninsured person because his aggregate turnover not exceeded the threshold limit for registration in a financial year. My name is Mr. Radharam is dealing with the supply of the ready-made garments. Turnover is only 2 lakhs. In the state of Tamil Nadu, for trader registration, turnover limit 40 lakhs. Now the Radharam is want to sell the goods through Amazon. Allowed to sell? Yes, allowed to sell. Reason? Amendment taken place in the recent past from October 2023 itself, saying that, hey Rajaram, we are permitting you to sell the goods through e-commerce operator. No problem. For you, registration not warranted unless until you reach the turnover of threshold limit for registration. Till the time you can supply the goods through e-commerce operator, but conditions apply. What conditions apply? Hey Rajaram, you should not have place of business more than one state. No sir, only one state, Tamil Nadu sir. Very good. Hey Rajaram, you should supply only through intra-state supply. God promise sir, I am not going to supply outside the state sir. Hey Rajaram, you should also authenticate yourself by giving your credentials to GST department. How sir? Open the portal. Not required for registration. You select non-registration category where you want to supply the goods to e-commerce operator. In that category you supply, you give information. What information sir? My PAN number, my name of the business, the company name, thereafter my phone number, my email ID, the should be same as you given for the PAN number. And you address, place of business address, you report. Then system will allot you one enrollment number, not a registration number, enrollment number. Having that enrollment number, you approach e-commerce operator and give that enrollment number to e-commerce operator and ask them to permit you supply your goods through e-commerce operator. The e-commerce operator will accept your application along with your enrollment number, authenticating that in their records. E-commerce operator open the doors for you to sell the goods. Hey e-commerce operator, you must ensure that you should not permit to supply such supplier of the goods to other state. Ensure that you should not supply the goods more than the threshold limit for registration. Once the registration required to go for registration by the supplier, then you should not permit him to sell the goods unless he provided to you a registration number under GST. If you violate the conditions, e-commerce operator, I will penalize you under section 122 of the CGST. Penalty, tax amount, 100% tax, or the 10,000 CGST, 10,000 rupees 20,000, whichever is higher is the penalty. Be careful. So now the point I am referring is simplified manner. Look on the screen. Now in the given case, you tell me here, Chari and company, seller of the goods Tamil Nadu, supplies the goods to e-commerce operator, buyer of the goods Tamil Nadu, billing address, delivery address is the same. Now Amazon required to collect the TCS or not? Yes or no, I am asking. Yes. Even the supplier is a registered person in composition scheme. So what? You collect the TCS and remit to Chari and company. Then we get auto credited to his electronic cash ledger only. I know that. You know that. The composition taxpayer not eligible to claim input tax credit. It is not input tax credit, man. It is a TCS going to be get credit to the electronic cash ledger, not electronic credit ledger. Therefore, Chari will avail that while making the payment to department. Get my point, sir? Now come back. Look in the given case. Amazon himself supply the goods, Amazon products to supplier. In that case, for Amazon, e-commerce operator registration required, but TCS not required, because the Amazon product, in the given case, Amazon is a e-commerce operator who supply his own goods. the supplier side e-commerce operator himself is a supplier. TCS is not applicable, but the e-commerce operator should here get registered under normal scheme, normal registration should be required. Now TCS is not applicable. Now in the given case, if Amazon supply the goods of a Pure England, now tell me, e-commerce operator is himself is a supplier of the goods? No. Seller side e-commerce operator is not the seller. In that case, e-commerce operator sells the goods of Pure England through his electronic platform. TCS applicable or not applicable? Yes, applicable. Get my point? Further, when to collect the tax? TCS. When make the payment? When the amount is going to credit to the account of the vendor. What value? The valuation, net value. What is the net value? Net value I am presenting here for a kind consideration is as follows. Net value. Supplies during the tax period means the period for which the tax return is going to submit, less during the tax period sales returns of the particular vendor. The net value positive on which TCS apply. What rate of TCS apply? TCS apply at the rate of 0.25% CGST, 0.25% SGST, IGST 0.5% is effective from 10th July 2024 onwards. Prior to that, it was 0.5% CGST, 0.5% SGST, effectively 1% of the TCS. Today, it is reduced to 0.5% of IGST as a TCS. Get my point, sir? On net value only. On net value. How to understand this, and I will refer to you. Further, in the given case, you tell me, my dear friends, Action company Anisha person supplying the goods through e-commerce operator to the customer. Intrastate supply only. Allowed? Allowed. In that case, Amazon required to collect the TCS? Not required, because supplier is a Anisha person. Condition supply. Hey, Mr. Anisha person, an e-commerce operator, look here. The e-commerce operator shall allow the supply of the goods through it only if enrollment number has been allotted on the common portal to the said person. Means the Anisha person SEP company should get an enrollment number by registering, by giving the authentication of his particular data. Information should say, hi department, I am here from so and so place supplying so and so goods to the e-commerce operator, permit me to supply. Then permission is given. That is called what? Enrollment number. Then with that only e-commerce operator permit to supply the goods of Anisha person. He shall not allow any interstate supply of the goods through it. No tax to be collected, obviously, by e-commerce operator. Get the point, sir? No TCS will apply. E-commerce operator shall furnish the details of his supplies made through it in the statement which is submitting form GST or 8 on monthly basis by 10th of the following month. While making the TCS, you should be mentioned in that return what are the persons who are they, from where they are supplying Anisha persons through my platform. That detail should be reported in the GST 8 return, which is payment of the tax of TCS by 10th of the following month. Is clear, my dear friends? If violate the provisions, penalty will apply. GST 8 monthly statement by 10th of the following month.
Only not do interstate supply only to e-commerce operator, or we should generally not do interstate supply on his own?
Correct, correct. On his own also cannot. Good question you asked. This is what I am expecting. Sir, my name is XN company, bro. I am where? In Chennai. Is clear? I am supplying through e-commerce operator, intrastate supply. Suppose if I supply by my own to interstate outward supply of taxable supply of goods, registration for me mandatory under section 24 class 1. Then automatically get registered person. You get my point, sir? As simple as this. Non-registration penalty will come. Offence. Section 132 offence. Required to get registered but not obtain the registration. Is offence. You get my point, sir? What is the difference between offence and penalty? Procedural violation, penalty. Financial loss taken place, offence. Non-registration, why not pay the tax? Because of non-registration. Non-registration causing financial loss, offence. Filing of return, delay happen, procedural violation, penalty. You get my point, sir? Severe offences which attract fine also. Fine different, penalty different. For offences, fine. Come back. Form GST rate, monthly return. Correct, sir? Monthly return. 10th of the following month. To pay the department to department, the particular TCS. Now, are they required to file the annual return? Yes. TCS wala required to file GST 9B return. Throughout the financial year, what is his TCS collected? What is the amount remitted? Form GST 8 monthly combination of 12 months should be report in the GST 9B, GST 9B, annual return. Due date is 31st December of the succeeding financial year. For the year 25-26 financial year, you tell me due date of final GST 9B is 31st December 2026. Is clear? Further, now I would like to bring to notice points here. Look on the screen. If two or more e-commerce operators are involved, in what case general apply? In case where e-commerce operator who got registered in the ONDC platform. ONDC means Open Network for Digital Commerce. ONDC network platform, where government says it is a government portal. You please come forward and register. E-commerce operators register here. A platform, customer can select any e-commerce operator which he like to place the order. Competitiveness will come. Thereby price will be more competitive price. So in that case, Amazon got registered in ONDC platform as a e-commerce operator. In the same ONDC platform, Open Network for Digital Commerce, the My Stores also got registered. They are also e-commerce operator. Now, seller side e-commerce operator, namely Peter England, want to sell the goods. Buyer who has his login ID password in My Store, he is not registered in the Amazon. So buyer placing the order in My Store to buy Peter England product. Peter England product is supplying by seller side e-commerce operator Amazon. There are two e-commerce operators involved here. In that case, which e-commerce operator liable to collect the TCS? Means seller side e-commerce operator himself is a seller or not? You tell me, seller side e-commerce operator himself is a seller or not? No, then seller side e-commerce operator liable to collect TCS. Now, buyer side e-commerce operator will collect the commission. Amount collected, what is the value of supply? Is, let us say, 18,000, 11,800. Correct? From that, buyer side e-commerce operator will collect his commission of 200 and pay to seller side e-commerce operator 11,600. Who liable to collect the TCS? Seller side e-commerce operator. Now the point, section 15, subsection 2, class C of CGST. The value of supply should include dash commission. Is clear? Commission charged by how much? By seller, buyer side e-commerce operator 200. It should include in the value of supply. Should exclude GST taxes. Any returns? Exclude. Now no returns. Exclude only GST. So 11,800 exclusive of GST is equal to how much? 10,000 is the value of supply which includes commission. If you take 11,600, add rupees 200 commission, deduct GST 1,800 is equal to 10,000. That 10,000 is the value of supply in the hands of the Amazon e-commerce operator to collect the TCS at the rate of 0.25% CGST, 0.25% SGST, effectively 0.5% of IGST. Get my point, sir? Say 0.5% of IGST TCS. On what value? On 10,000. Therefore, how much will come? 50 rupees or 50 rupees will come as a TCS. In the hands of sellers and e-commerce operator, TCS will apply. He has to bring the payment department. Got the clarity? Seller side e-commerce operator will get the commission. Get whatever you commission want to get it. But that commission also should add in the value of supply. As per section 15, subsection 2, class C. Valuation is our base valuation. So here look, 11,600 received less Amazon commission 300. So what? My value of supply inclusive of commission 10,000 on which 0.5% 50 rupees TCS, and the net amount 11,250 paid to Peter England. Is it clear? This 50 rupees will auto populating in the electronic credit cash ledger of the dash Peter England. When he is going to make the payment of GST, he can utilize 50 rupees from electronic cash ledger and the balance amount only should pay. Get my point? Now you tell me, in the given case, Amazon product, Amazon wala selling. Seller side e-commerce operator himself is a seller. He got registered in ONDC, Open Network for Digital Commerce, where buyer side e-commerce operator, my store also got registered, and buyer side e-commerce operator placed the order by login of my store app, where he placed the order to purchase Amazon product. And in that case, two e-commerce operators, one is Amazon, one is my store. In the given case, seller side e-commerce operator himself is a seller. Seller side e-commerce operator himself is a seller. In that case, seller side e-commerce operator TCS not applicable. But my store is there, buyer side e-commerce operator. Hey, buyer side e-commerce operator, you liable to pay TCS. If the seller side e-commerce operator himself is not the seller, then seller side e-commerce operator liable to collect the TCS. If the seller side e-commerce operator himself is a seller, buyer side e-commerce operator is liable to collect TCS. Simple. Now, who is responsible to collect TCS? My store. See how much collect, total value 11,800. TCS will apply on what value? On 10,000, which might be includes the commission of the my store. TCS is applicable to my store, buyer side e-commerce operator. Then 11,800 collected less my store commission 200 less TCS 0.5% 50 and paid balance amount 11,550. So TCS is calculated on what inclusive of commission, exclusive of the GST. Is it clear, my dear friends? As simple as that. A small problem I will bring to notice. On the face of it, you can say, and we conclude the class for the day. With that, I can say that TCS is concluded for your batch. Look here. I want the answer. Take the calculator in your hands. Hold the calculus in your hands. Flipkart Online Services Private Limited electronic commerce operator has supplied product A from supplier Sri Ram Limited to various customers aggregating 50 lakhs for the month of July. Further, there are sales returns of product A sold in the month of May, June, July amounting rupees 20 lakhs. Returned in the month of July is 20 lakhs. Find the following one. Who is liable to pay GST and TCS? GST liable to pay by supplier by whom? Sriram for supply of goods, and TCS liable to be collected by Flipkart online, because supplier said e-commerce operator himself is not a supplier. Not only that, on the commission earned by Flipkart liable to pay GST under regular scheme. Is clear? Further, amount of TCS, tell me. Net value is the value of supply. 50 lakhs minus returns 20 lakhs, balance on 30 lakhs, 0.5%. How much? 15,000. Maybe split in the interest rate supply na 7,500, 7,500. Is clear, my dear? Further, due date of deposit of TCS by the Flipkart, 10th of the following month. Which month? 10th of August. Because July month na. Return. Which return should be submitted? Form GSTR 8. Excellent. As simple as that, my dear. All the points are in front of you. With this, TCS chapter conclude for your batch along with the TDS.